This is the New Zealand yen on the 60, and we have a wedge pattern that's set up. I'm going to talk through what I've used as my entry here and the reason why I think price can go a little bit higher. So to do that, let's go out to the daily time frame. And here on the dailies, we've been really just slowly working our way up. Technically made a new structure high just here, and so we could be looking at the market continuing to move higher. Now the question is where do we think the market could come to? We could first of all invert this leg and look for a 127 up at that area. We can look for structure, and we can say that really this would actually be the area that I'd be looking at, that 127. Let's go down to the 240, take a look at this. Okay, here on the 240, I've been keeping a close eye on this move. Now, it wasn't something I entered because we didn't have enough structure, but we do have a flag pattern that has occurred, and you can see that we've actually broken out of the channel. We've pulled back a little, but we failed to continue on up. This is also an initial structure high here. So you can see a nice rally, then a pullback. So I'm really looking at the market continuing on up higher at this point. I am going to put a structure level in just here, which is where price came to, and it came to that 7600 psychological number. We do have a level of structure there as well. It's nothing definitive, nothing fantastic, but it's just where we're currently trading at. As well as that flag then, what we do have is we have this. Now, it's not a very directional pole, but we can see the market starting to wedge. And the definition of the wedge for me is the high of this candle just here cannot touch the closes of the candle, and we have exactly the same down here. If I bring this down to the very lows, you can see that we did not come down to test the closes of the candle. Now this is a gap that happened in the night, so just ignore that. That should look like that as a candle. And look here that we are consolidating sideways, a sign that we are actually holding this trend line. Now I need some kind of confirmation here though that we're going to go higher, higher close, something like that. We haven't got it, but if we do drop down to the 15, what we have got right here is an advanced pattern. This is a Gartley pattern, and you can see that we've actually come down for a retest. And we have then put in a higher close above this little structure level. And we have put in tweezer bottoms down here as well. So you don't want to drop down too many time frames because you lose your entry signal really. But in this instance, we've got the Gartley as the entry. It does mean that I can get stops just behind it, and just like that, because I am looking at the market holding this area and going higher from this point. So let's just go back out to the 60-minute time frame then. If we're looking for targets based on this smaller wedge pattern, then I'm going to be looking for that 127 fib. Okay, I want to front run by a couple of pips. And the reason why I'm not playing for targets based on this big flag pattern is I'm not too sure if it's good enough, and if in doubt, stay out. So I'm okay to take it into consideration as potentially we're going higher because this is an initial structure high, and this is a channel which we have broken out of, but I'm not comfortable playing for those big targets. So what this does actually mean then is if we delete everything off and we work out what our risk to reward is after we've had our two touches either side, then the risk is this much. the reward is that much. And so in terms of pips, that is 16. And the reward is 52. So a nice risk to reward there. And I have said this in some of my other videos, is if you don't get your best entry, because this isn't confirmed as a triangle, I'm going off my thousands and thousands of hours worth of training my RAS and looking how and where they appear and what signals we have to get my entry. But there's no problem in waiting for price to come up here, break out, pull back, and then get involved, because that's a higher probability trade. Just for me, that's a higher risk to reward, and I'm quite comfortable taking a few shots at this with a 16 pip risk. We're back. I've just been stopped out of this trade for 16 pips. Had one of these earlier which stopped me out as well. What a shame, but you know, a small amount of risk here, 16 pips for 52. You don't need many of these to come off before you hit your profit, but this one lost for 16.